All right, let's talk about Zoom real quick. That's ticker symbol ZM, Zoom Video Communications. And we'll go over real quick where we're at with the charts. So we coming into this week, we gapped up right here on Monday, came up into this range where I had, told you guys you have a resistance and a prior trend line. We were not able to break above it and start printing candles above it to where the bottoms of them were once again above it to turn it into support. So if you can't turn it into support, it remains as resistance. So we continued bouncing in this area. I thought that depending on what the markets were going to do first thing Tuesday, or possibly I even thought we might get like an early morning drop off Tuesday morning, like we sometimes do. They'll push it down before we go back up. I figured maybe we'd come down and test, not just come down and test this line, but come down at least to fill this gap. That did not happen. Instead, we started off the day immediately bullish with futures up, and in pre market trading, everything was up. As the markets opened, I thought maybe once again, maybe a sell off. I was sitting right there on the dial ready to buy more because I still think we're going to continuation for at least a second here, at least another few days or into next week towards the end of the month, something like that. I'm just continuing to, follow the overall stock market and its indicators. As of right now, I'm still seeing more, gas in the tank for the relief rally. So I figured, okay, if we're not going to come back and test this yet, then we're going to pop up in here, turn this into support. It came with such authority that we just gapped all the way up. I mean, so once again, you had a gap to fill. So as we started getting in this area, I didn't then want to, FOMO in or print any videos for anybody to get crazy. I was thinking this has got to pull back. So it did. It pulled back, filled most of this gap. I still think we could come a little lower, maybe into the opening of tomorrow morning, or maybe even the sell off tonight and after hours as people take profits when they see that their account's up after work. Maybe that could fill this in. If the market's open and they're going back down tomorrow, the entire S&P, the Nasdaq, they're going down. I believe when we come down, you could actually, at least temporary for the time being, plan on this grabbing some support in this area and coming back up. And I believe not just retesting, but getting through here and continuing. As of right now, it looks like it already wants to do that. And maybe this gap down here gets filled at a later date. That's fine too. So if we can continue with this momentum right now and keep pushing up, the entire S&P can push up further into the maybe 38 3900 range, but then I would really expect to start reversing course and get back into this downward trend we're in right now. You've got the markets being pushed up by lots of things. Not only are they extremely oversold, so they need a little bounce anyways, you've got so many people short and just keep piling them on that every time you do get a bounce, it's extra dramatic because you're also getting short squeezes in between as well. So there's a lot of market manipulation going on right now, and it's causing things when they do pop to immediately just push way up really fast. So we're still in, this overall bear market downward trend, as you can see here. I could, draw a line if you need to. We can zoom out and look at this on a higher time frame to give you some, better scope of this idea here. But if you see, you're continuing to trend down. And when you zoom out, you really see that this whole area we're in, including what we're trying to get back up to, is all just down. I mean, all of it is some of the cheapest Zoom has been in like, over 2 years. So speaking of gaps, we have a huge one here. Maybe that's what this can do, is it can come up now, fill that, grab support. I mean, grab this old support as resistance, and then that's where you plan on turning back around basically. And it could even hit that early for two reasons. Not only do you have old support lines back here that are now resistance, so you could maybe start to look at basically right when you got to the top of this and filled this in, then you start looking to trend back down, even if it's just for a bounce and going back up. If the markets are remaining strong, you're like, no, that was it, the bottom's in. I think we're going up for the next couple months. At least expect a retest, load back up, and then go back up into this range to sell. In the grander scheme of things, when you zoom out, all of this is very cheap and very much at the end of a downward trend for Zoom. I mean, this thing was trading at like $600 or something at one point. What is this? Just a couple months ago, it was at just over 400. Zoom out even further than that. I'm pretty sure. Yeah, I think. Yeah, that's what I was saying. So you got a $600 peak back here in October, actually 1 year ago. So considering we're coming into earnings season again, I'll have to pull up. I thought I had it next to me. Now I feel stupid. I know there's an earnings coming up for these guys. I'll include it in the next video. I know that Shopify's got one on the 27th of this month, and NET, which is also known as Cloudflare, they report on the 3rd of next month. So we're getting right into this area where the end of this month and the beginning of next month is a lot of tech and growth names will be reporting. So even if it's a buy the rumor, sell the news kind of thing, you get a pump out of this. And there's a very good chance Zoom goes and runs back up to, I'm thinking, at least about $95 to $98. Very good chance it can run all the way up to the resistance at the 105, possibly even break over it for a minute. And with any bit of narrative or positive news or change in anything that's going on macro, Zoom will immediately not just be up in this range, but then come back and retest and turn the 100 to 115 range into support, actually. And then you could start really talking about, opening up the doors to some of this, like, say, 130, 125, 150, 200. Now, the rest of this back here, you got to remember pandemic lockdown, everything over pumped, everything over, just ran up with the dollar and the money printer going all day long. So, don't expect any of this anytime soon, these really crazy numbers. But these first ones up to these resistance lines at like 100 to 125, or even if you broke past that, you get some brief stuff into the 130, 150. Those are on the table, at least to these first resistance lines. Once you break above here and hold for a minute, it'll go up to hit these levels at 115 to 130, even if that's just to immediately let the bears take control again and then create this downtrend and then come all the way back down here again. But for right now, in the short term, I'm playing this. I've been continuing to dollar cost average down some older positions I had with an average price that was at like $100 and something back here when I thought these were bottoms. And I think at one point I had bought down here, sold up here, tried to reload, got busy and didn't get out on time, and ended up with an average position that was like just over $100. When we came down to here, I bought a decent amount more, got my dollar cost average down to like 90 something. It was like 97 or something like that. Popped up to here. I got a little bit out, but was hoping for a bigger move, which didn't come till over here. So ended up round tripping that all the way back down. And recently started dollar cost averaging aggressively again when we got down to this $80 range. Kind of exhausted myself a little bit for just this one stock anyways. Wanted to still have money for other positions. When we got up into here, I got out of part of it for some profit, held some more of it for too long, and then when we ended up back down in these lower ranges, I was negative again and was like, wow, okay. So instead of only waiting for the can I get lucky and buy at $60? When we came down into this area, I started buying again, and then I bought again here. And now I'm luckily getting to a point that I'm back into the green again. So, dollar cost averaging can work, but remember, you're in a bear market, you're in a downward trend, and you don't want to just continue chasing something all the way down and getting it wrong the whole way down. If you're not trying to aggressively dollar cost average more than you want into a position just to get some out on a pop, or to get out even or get out with a small profit on a pop and reduce your position, then don't get too aggressive on these individual levels. Play them as they go. Put some in here, put some in here, put some in here. I still believe that the low of the year is most likely not in yet for Shopify and Zoom and other major growth and tech stocks. However, I do have a whole argument and thesis for the idea that they will be in before the NASDAQ and Bitcoin and other things put their actual bottom in. I mean, Bitcoin could, there is a whole nother argument. Bitcoin's bottom's in at 17.5, and all we need is to retest and prove that. But when you get enough pullback on the entire market of the S&P, the NASDAQ, and all the overall stocks to pull Bitcoin all the way down to that 17,500 and see if it's going to hold. Something like this, if it ends up back up in these areas, could come back down and same thing. See if this is going to hold as if it's like Bitcoin 17.5 and then things go back up. I will still be looking for somewhere either like the day after Thanksgiving, a crash, and actually look for a real low in the S&P 500, or fast forward to right around the drama coming in after the right say towards the end of Q1 going into Q2 of 2023, as we start looking at those earning reports and they start seeing the real effects of all the inflation and all the stuff they've caused that they're not really seeing yet. And then you get a bigger drawdown based on that doom and gloom. Not to mention, if anything macro changes, anything with wars, anything with we're going to continue to raise inflation. And also, I expect them to then start using the word depression instead of just the word recession. I feel that by that point, they'll start really using the word recession, because right now it's just kind of being tossed around, but we're not supposedly in one or going into one, or now the odds are getting higher that we're going into one. Well, for the rest of us who, I don't know, try to play chess while other people are playing checkers, or try to play 3D chess while other people think they're playing chess, we're already in a recession. That's what people like me are calling. I'm saying we're already in a recession. And I've been telling people for over a year now that by the end of this year, you'd be hearing the word recession, but we would already be in one, in my opinion. Well, now we're in that time, and I still feel the same. I feel we are in one. I feel they're about to start using the word more. And I feel by the end of this year to Q1, Q2 of next year, they'll be using the word depression. Not claiming we're in one, but throwing around that we could go into one because we're officially into recession. I also feel that it won't be until later out into like that March, April timeframe of 2023 that they start really telling you how bad this housing market crash can be and how deep it can go, as well as then maybe starting to try to put on the table and let you guys know about the up and coming, in my opinion, car market crash that's coming. And I'm not just talking about the prices of cars, I'm talking about credit too overall. You got way too many people out there who have taken out loans that look like what house loans used to be like, unless you were living in California. I mean, I understand that our houses have been extremely overpriced for a long time, and $400,000 or $500,000 homes going to 1.2 million for no reason is just kind of our cycles as they go. People are like, oh, we've seen this back in 06, 08, whatever, we've done this before. But you have to realize most of the rest of the United States, they were buying houses, for 100 to 150 that were supposed to be 40 to 60 or 60 to 80, where they live. And right now, you've got people on average going out, and $60,000, $80,000 car loans are nothing now. $100,000 to $150,000 car loans are scary common. And unlike a house, which can, in a few years continue to go back up again, cars are created in a way that they're like disposable. In 3 to 5 years, these cars are typically worth 40 to 60% less anyways. That doesn't take into account the fact that we've been paying too much for them with an inflation. We've been paying too much for the cars overall because they've been hitting people with 5,000 all the way up to like 25,000 plus markups due to supply chain shortages. So you got guys out there buying $100,000 cars that normally turn into $40,000 to $60,000 cars, but because of supply chain and inflation combined together, these people bought a $100,000 car and paid $150,000 or $160,000 for it, and it's going to be worth about $50,000 to $70,000 in the next 3 to 5 years if they're lucky. So if you don't think people are going to start walking away from their credit and these loans, think again. Look at what they did with the housing market, and you knew houses would come back someday. The car is worthless, basically. So I just feel that that's going to be even more of a dramatic effect on that. So that's kind of my outlook for there, and my outlook overall with Zoom. If you want to hit me with some personal questions to, give you a specific timeline, time frame, whatever your trade is, weekly, monthly, daily, try to get you a video or at least answer your comments. Answer your comment in the comments. Boy, I can't talk today. So, yeah, I guess we'll just kind of leave it there. You guys enjoy your Tuesday. Trade safely out there. And overall, remember, we're in a downward trend. We're in a bear market, and you've most likely not seen the lowest of the lows on a lot of things you might want to buy. So no reason to FOMO. But if you want to jump in on these retests, and then sell them on the next pump, or sell them when they go up that same day, then all of these are on the table right now. And I think there's a lot of good scalp trades and a lot of good swing trades and day trades right now. Overall, if you're looking at a 3 to 5 year time horizon, all these